When Treasurer Wayne Swan set out to frame his latest budget, he must have been wondering what had happened to those glorious streams of money that his department had said would be flowing his way. More than $50 billion worth of taxes that had been expected to turn up in the previous 3 years didn't. The tax take for this year is down about $40 billion on what had been forecast 3 years ago, and next year the write-down is bigger. So it's not surprising that the deficit blew out. In a moment I'll talk to Wayne Swan about his plans to turn things around, but first Neil Woolrich with his look at the key features of the budget.
Wayne Swan's fourth budget may well have been his most challenging.
The economic backdrop is a bit like the fiscal backdrop. It's a tale of two halves: short-term softness and medium-term strength.
The minority government not only has to placate the independents and the Greens, it's also facing what the Treasurer describes as a patchwork economy.
To get back in the black.
We remain concerned, however, that the dollar is going to pose a major risk to the economy over the next few years, and the budget is light on, in our view, in issues to deal with that.
This is a workmanlike budget. The government has made some spending cuts, but nowhere near enough. The government has made some welcome investment in workforce skills, but there's not enough support.
Treasury's economic assumptions were broadly in line with the Reserve Bank's most recent forecasts and market consensus. However, the budget is also banking on just a small drop in the terms of trade, meaning the prices Australia receives for its exports, especially commodities, must keep pace with any rise in import prices.
One of the things that's a problem with the budget in that sense, of course, is that it's done nothing to lessen the reliance of future budget surpluses on the terms of trade holding up.
Wayne Swan says spending growth will average 1% over the next 5 years, although that's coming off a base that's been bloated by stimulus outlays.
You could hardly call this budget a tough one. It's one that saves about $17.25 billion on the expenditure side and redirects all of that to other areas.
And while the economy remains fragile in parts, the booming mining sector continues to squeeze the labour market. To help alleviate those pressures, Wayne Swan has unveiled a $3 billion skills program, along with other measures to make it easier for firms to hire foreign workers.
Makes very important investments in skills, a really major headline issue for the Australian Industry Group and its members. We feel its approach to infrastructure is quite sound and comprehensive in dealing not just with projects but with the governance surrounding them, and encouraging private sector participation we think is good.
Business leaders remain concerned, though, about a lack of detail on some measures announced on budget night. And there was no more clarity at all this week on two reforms that loom large over the economy: the taxes on mining profits and carbon emissions.